In today's video, we're going to break down my third trade of the week, a long position here on CAD JPY. Hey traders, welcome back to the channel. So today we're going to go into detail on the CAD JPY long position that I had here this morning. Now, if you remember, or if you saw yesterday's video, we were trading Euro USD, and the trade setup there wasn't a prime, A+++ setup. The same thing was present here today. It wasn't an A+ setup, and it actually wasn't even a B setup. The trade here, I graded by the parameters of our system as a C setup. Now, the entry signal here, if you know my system, I either trade A1s, D1s, or D2s. This was a D1 entry. It's a divergence entry using significant levels and the lower time frames for the precise signal. And this is what we teach in the Advanced Divergence training course. And if you haven't seen that already, there's a link down in the description to this video for you to learn more information about that. So let's flip over to the chart. First, I want to show you where I got in and where I got out, and then we're going to kind of go backwards and break down the whole trade. So I was in this morning a little bit after 7:20. My stop was at 84.05. My entry price was 84.15. That's about 10 pips away. So I knew that if I was going to take this trade, I was looking for at least 20 pips of rise if it was going to get me into the position, if it was going to make me click the button. So when I measured the risk reward, knowing that I was trading it back towards at least the high of day, somewhere up in the pins here from the Asian session, I knew I was looking at 20 to 30 pips of rise. So 2 to 1, 3 to 1, it's a good risk reward setup, something that I definitely want to be involved in. Now, I just mentioned to you that this was a C setup. So when I see good risk reward, but it isn't an A or B setup, I size down into this C setup with just a smaller position. The risk reward is still there. I still want to potentially go make that money, but I don't want to be wrong and lose a lot of money on a less probable setup like a C setup is. So when you can grade the setups because you have parameters in your system saying, hey, the EMAs aren't that great here, or the TDI isn't right, or maybe the Asian range isn't right, whatever the factors are of your system, if you can grade them saying, hey, this could be better, and this could be better, that should go into the size that you put on these positions. So again, just like yesterday, I was trading the Euro USD positions as C setups. This one, very similar. I traded it as a C setup as well. So very similar size. Now, knowing that I was trading it to high a day, I was looking for it to get back through the 50 EMA, which is this blue line here. The 800 EMA was down below us, which helped confirm to me that we were in that uptrend. And what I really liked, if I pull up the TDI, is that the TDI was in the buy zone for majority of the day. Now, at the time of my entry, you see the TDI was falling, but notice how the RSI was rising. Even though the yellow line of the TDI, which is the market sentiment line, even though that was falling, that sometimes gets delayed, I think, by price action. And because of this push down here to start the London session, I think that's why you see market sentiment fall. But notice how it breaks the 200 EMA, comes back up and retests it and holds above it. Now, why that's interesting to me is because if you can use significant levels like the 200 EMA and stick to your bias, which here was long, then I can go to the shorter time frames and potentially find a D1 entry with really good risk reward. And that's exactly what I did here. So if we take it to the 1 minute, I want to just break it down for you really quick. You'll notice there's actually two sets of divergence, two different opportunities to potentially get this thing long. So you could have been in back here. If you look early this morning, you see how, you see how here price action is falling and your RSI starts rising here from about 215, 245, and then even into 320. So as price is falling and the RSI is rising, you could look at that as divergence, and that could potentially present you a D1 signal. And that did. And that created the low of 84.05 from this pin. That created the low that I didn't want to see broken. So I didn't jump in on the first D1 entry back here. I waited. It was only 4 o'clock. I had just gotten out of bed at 3, so I was still a little sleepy. I was like, I'm not going to jump into this thing yet. But then what ends up happening is it builds more divergence right here. I'm going to draw this one for you. So you see price falling here, just here to here, it's falling, but that RSI is rising. Now, you can't just go finding divergence all over the place and trading it. That's what I teach in the course, how to be specific with where you trade divergence from. But because we were at a significant level, the higher time frames aligned with what the D1 signal tells us, I then used this divergence and gauged my risk reward setup based on this divergence to give me my entry signal. And that's what I got in, like I said, right here at about 720-ish, because it broke back above the 50. It held the low that it had just set here from the divergence structure, now at 84.09, and it moved back through the 50 here. So as soon as it came back up through the 50, this is where I was looking to get into the trade, right around here. Like I said, 84.16 was my entry price. So if you got in here at 84.14, with my spread, that puts me in at 84.16. And that's why I have it marked here. So from the entry, it chopped for a while. I basically sat in the trade and just knew that it wasn't going to pop and take off higher because you were under the 50 EMA. Being trapped under the 50 EMA tells me we need to get above that before we see this thing go touch high of day. And you can see it does break, but then it comes right back down. But notice how, if we erase everything here, notice how price just continued to make higher lows all morning. So it was chopping, but it was slowly chopping higher. Once we got back above the 50 here, and it left this nasty pin right here down to 84.14, and we closed back above the 50 there, I knew that we were good to go. And then look how it rides the 8 EMA, just like the good A1 trades, just like a good trade should. It rides the 8 EMA all the way up over 20 pips from the entry. Remember, the entry was 84.15, 84.16. If you measure that, even from 84.16, you're getting over 20 pips, 23 pips here, all the way to the top. Now, it does come down really hard here. You can see it gets spiked down very quickly, and that's due to this US-China trade deal news here. This is high impact breaking news on Forex Factory, as you can see, at 137. And it says China tariffs to stay until after the US election despite a deal. So if you look here, right when that news came out, 1337 is 137, 136. That's when this pair pulled back. JPY pairs, Japanese yen pairs, react heavily to China trade news because they're closely tied to China. You have to assume that, right? So, and also because the dollar is closely tied to the yen, because when people see turmoil in the dollar, they flood to the yen. So naturally, the yen is going to move a lot when you see breaking news on the dollar like that, especially high impact breaking news. But start to finish, I managed this trade really well, and I want to talk to you about that as we wrap up the video here. So like I said, when it moved up into profit, what I did, let me mark up this entry for you one more time here. Stop right here, take this all the way up. So what I did was, as this thing moved higher, I moved my stop into profit with C setups. As soon as I get to 1R, a little bit more than that to cover the spread, I close half the trade. So right here, when we were up just about 10 pips at 84.24, because we were in at 84.15, right? Let's call it 84.25 for the 10 pips right there. As soon as we reached 10 pips, I closed half the trade. Then what I did was locked the stop loss here in profit. So now the stop being in profit means I can't lose any money on the rest of the trade. So price is moving higher here, stop is now down here at this red line, and I exited half here at this purple line. Price continued higher. I closed a little bit more, another 25% of this thing, as it retested the highs from earlier at 84.38, and that was my best exit with that 25% piece. Now what I left in was just a quarter of the trade, and that got stopped as it came back down here. My stop, after I had closed that piece at 84.38, my stop was moved to 84.23, 84.22, and that's where that pin, as you can see, hit me right here at about 137, whatever we said. What was the exact time? Yeah, 137. That's when it stopped me out. So I closed half at 1R because it's a C setup. I don't do that with A setups. A setups, I don't touch at 1R. I let them go to at least 2R, then I take some off. But with this one, because it's a C, I need to make sure I'm making money. So you take some off at 1R, lock the stop, so you can't lose now on the C setup, and you don't want to give back profits on a C setup. So you lock the stop and you let it go candle by candle. Once we were at 84.38, because I knew that it could bounce off these highs, I wanted to make sure I took a little bit off there. So using the key level of the previous high from earlier in the day, really the initial high set during the Asian session, using that level, I was able to say, hey, let's take off a little bit more here. Yeah, it could continue higher. I was looking for this to go to 84.50, but you have to be objective in that and know that it doesn't have to continue higher. So you gotta book profits. And that's why I moved the stop loss up, took a little bit off, and then boom, news hits, stops me out, finish the day profitable, and it's a great trade. A really well-managed trade. So I hope this helps you see more into what's going on in my head. I try not to give away all the information in my courses here on YouTube because I have to be fair to the people that want to pay and invest in their education, but I also want you guys to see that it is the same patterns that I'm trading every single day. A1, D1, D2, that is it. And I've been doing this with the same patterns since 2016, 2015. It hasn't changed. I've just gotten a little bit better and a little bit pickier and a little bit bigger in my size. And that's what I want you to do. So like I said, I hope it helps. If you have any questions, please drop a comment down below. Make sure you're following me on Instagram. You can see my username right above. And if you need me for anything, just reach out. I'm always here to help you guys. All right. I'll see you in the next trading video. Have a great rest of your week. And like I said, let me know if you need me.